Welcome to today's Business Data Analytics course, CPA Advanced Level. And today I want us to solve a past paper question. And this is December 2022, the pilot paper. And I want us to solve question number 21, the practical section of it. So the question reads, Amani Pharmaceuticals Limited is a mid-sized firm exploring prospects of future growth. The management of the company has prepared the statement of profit and loss for the year ended 30th June 2022, with forecast of expected growth rates in various line items for the next 3 years. This information is presented below. So we have the information here, you read it, we understand it, we see that it is a statement of profit and loss with their values. We have revenue, cost of goods sold, the gross profit, we have the profit before tax, the profit after tax, total equity, total assets, and we have the corresponding figures. We also have the growth rates based on the scenarios. We have the worst case scenario, best case scenario, and the best case scenario. We also have the additional information. We have the the corporate tax rate at 30%. We have growth rate. The growth in equity is only attributable to changes in retained earnings. And we also have a hint there, in applying the growth rates, ignore changes in opening and closing balances. Total equity, we also told, will grow only as a result of retained earnings. Now, required. We are told that we are required to prepare a spreadsheet showing the forecast statement of profit and loss for the next 3 years under each of the 3 scenarios. And then after that, we are supposed to compute metrics, the net profit margin, the return on assets, the return on equity. And then finally, we are supposed to provide a summarized dashboard with suitable graphs to highlight the revenues and the net profit under each scenario. So, Step 1, we simply open up Excel and we copy down this data on Excel for the purposes of working it out. So we begin copying down the data. So from this side, we shall show revenue. And then on this side, we shall show that this revenue is represented in thousands of shillings. So we type that. We have cost of goods sold. We can adjust the column width for our data to fit. Cost of goods sold is 3,200. Then we have the scenarios. Have the worst case scenario, the best case scenario, and the best case scenario. So here I would advise you to type it down in percentages. So we have 2%. We can insert a column up here, and then we write growth rates scenario. So here we have 2%, 5%, 10%. Then for the cost of goods sold, we have 2%, 5%, and 10%. So copy down that data as it is. So here is our data copied down. We have the tax rates written there down. So the first step, we are supposed to show the first question, we are supposed to show the forecast statement, the profit for the next 3 years. So what we do, we first start with the worst case scenario. And what I'd like to do is copy down this down here. So we can highlight it, Control C, and then we copy it down here. And maybe on top here, we can write worst case the worst case scenario. Misspelled scenario, the worst case scenario, right? So we are supposed to do it for the 3 years, and then the following 3 years. So the current year, according to the question, was 2022. So the next year is 2023. So you write that 2024 and 2025. So when we come here, we use the growth rates presented as well as the base year data. So what do? We multiply the growth rate, we multiply the base period quantity by the growth rate, by 1 plus the growth rate. So how do we do that? We type in equals, and then we click in B3 for revenue. That's where revenue is. We multiply by, then we open brackets and we type 1 plus 2%. So the basic way in which we show growth. So it is 1 plus the growth rate times the base year rate. So we have that. And for 2023, we have, we can see that we have 4590 for the first year, for the first 2023 year. So we go down for cost of goods, we do the same. And here, a simple trick, we can multiply. We can do what we did here. We say we'll write the equal sign. We click on B4, then we multiply by 1 plus the growth rate, 2% here. And you press, we click, we hit enter, and we get that here. We get that the cost of goods for 2023 was 3,264. Now, to do this easily, we can just click on this this cell here, B28, and simply drag it down like that, right? And we shall come up with the same figure. Now for gross profit, what do? Gross profit is revenue minus cost of goods. So how do? We type in equals the revenue cost of goods plus. Here we say plus because the cost of goods has already been presented in negative or in minus form. So we get that. Then we can format that. We can format that here. So we want it to have the top border there to show that it is a total. Then here we have other income from investment. One trick we can do, we can simply copy this formula here, copy it down here. Instead of repeating the same of saying that B6 times 1 plus 2%, we can simply copy down this formula here. We click there, B29, we hit, can say copy, and then we come here and we click paste. So what do you get? You get that figure. If you highlight here, you can see that it is already shown that B6, that this figure has been calculated. When you come to this formula bar, it's called formula bar, you can see that we calculated this 15.3 by simply saying B6 times 1 plus C6. So it's a simple trick in Excel whereby you don't have to write down the formula in every section. You can just copy it down. So when it comes to total income, we don't need to copy it down since it's not growing. It's not determined by the growth rate. We simply add the gross profit plus the other income. So we click equal sign, gross profit plus other income there, right? Then when it comes, when it comes to administration expenses, we still use the same formula for growth rate. So we grow it by saying equals sign. We write the equal. Whenever you want to put an Excel function, you write an equal sign. You you type in an equal sign. So we say equals, then the administration expense times, you open the brackets, 1 plus the growth rate. Simple as that. And we have it as minus 220.5. Now, instead of doing the same for distribution expense, we can simply copy. Now, how do we copy this formula? We click here and we click and we type, we insert Control C, and then we come down here at the depreciation expenses cell and we type Control V, and it will automatically insert the same formula based on the cell, right? It will automatically know that what you intend to do is copy the same formula, but now based on the different cells. So if you've moved a cell downward, Excel will automatically know that the cell you are referring to is the cell that you've moved downward to. If you're not okay with shortcuts, you can key in the formulas as they are, but for the sake of time and also for the sake of future references, it's good to know these skills. So we proceed. We proceed. So we see that now when it comes to earnings before interest and tax, how do we calculate that? We get the sum of this. So we get the total income minus administration expenses minus distribution expenses. So here we type in the equal sign, and then we type in we click on this the B6, the B32, then we can type in plus the administration expenses plus the distribution expenses, and we get that. So we get that the earnings before interest and tax and depreciation is 906.6. Now for depreciation and amortization, we do the same. We have that we are told that it's going to grow at 5%. So how do we calculate that? We say depreciation multiplied by open brackets 1 plus the growth rate, and then we hit enter. We get that. So now to get the earnings before interest and tax, we simply add, say the earnings before depreciation, we click on that, B32, plus the depreciation and amortization. Remember, again, we are saying plus because the figures are already in negative. They're already in minus. We cannot minus it. If we say minus, it will become a positive. As you know, minus times minus is positive. So we say plus, since we already wrote it down as negative. Now in Excel, the data is formatted in brackets to imply that it is negative. This is the accounting format, right? You can, when you type in negative and then you highlight and you format the data as accounting format, it becomes it is put in brackets, just as you know, and as you've been doing in your CPA. When you want to show that you're minusing a figure, you put it in brackets. So you can format your Excel to do the same. So we say earnings before interest plus depreciation and amortization. You hit enter, you get that. It's good to format it to know where that this is a calculated field, and we put in a top border. So you come here at the home and you click in top border so that it can be easily seen. Same for this one, we can do the same for this one, earnings before interest, top border. And also total income, we insert a top border to show that it is a calculated field. So interest expense, again, we can see that it grew at 10%. Now this time instead of writing down the formula, let us copy down this what we did here for the depreciation, and copy it down by simply clicking on that cell, hit Control C. You can see it rotating like this. This shows that has been copied. Now it's waiting to be pasted. Now we come here at the interest expense and we hit Control V, and we have our data there automatically. To prove, you can double click on the cell and it will show you, it will highlight the cells that have been involved in this calculation. As you can see, we have used these cells, so we are correct. Moving down to earnings before tax. Now the earnings before tax, we again put the equal sign. We say the earnings before interest and tax, and then you say plus the interest expense, and then you hit enter, and then we get 616.1. Again, we format it with the top border. Remember the way we underline when we are doing the income statement. So you hit it with the top border, you can hit it with the top bottom based on which cell you are in. Then we have the income tax. So we are told that the income tax is at 30%. So what do? We click equals, and then remember we are showing that our negatives, we are representing them as negative as opposed to as positive. So we say equals, and then we write a minus sign, and then you open the brackets, and then you type this 30% multiply by the earnings before tax. Close the brackets and hit enter. Right? You can see this is the negative tax. The tax is negative. The tax is negative because we are subtracting it, and we can format it just like the rest by clicking here at the accounting. As you can see, it is accounting format, so we want it to be consistent. So profit for after tax for the period, how do we calculate that? We say the earnings before tax, we minus the income tax. So here we say earnings before tax plus this income tax expense. We hit enter and we get 431.9. Again, we format it, we add a top border or we underline, we get that. Then dividends paid, we are told they grow at 10%. So once again, we can come here, instead of rewriting the whole formula again, come here at the interest expense, hit click this cell, then click or type Control C, then come to the dividends paid cell, hit Control V, and you get your 308. And then return profit, your retained earnings or retained profit for the year, we calculate it as the profit after tax minus the dividends paid. So we get profit after tax minus the dividends paid, then we hit enter. So we have the retained profit for the year as this. Again, we can underline or hit the top border, we get that. Then we have the retained profit brought down. So this one is the retained profits for the previous year. So the retained profits brought forward is the retained profit carried forward from the previous year. So we refer to it, we say equals the retained profit brought forward, carried forward from the previous year. So we have it here. So we click on it and then we hit OK. Then to get the retained profit carried forward, we simply add the retained profit for the year plus the retained profit brought forward, and we get the retained profit carried forward. Again, we can format that. So we have, then we go towards the total equity. To get the total equity, it is simply the total equity for the previous year plus the retained profit for the current year. If we can go back to the question, we can see that we are told total equity will grow only as a result of retained profits. So to get the total equity, we say equals sign total equity for the previous year plus the retained profit for the year. Hit enter. Then we have the total equity. For total assets, we also assume that it will grow at the same rate. Why? Because we know that assets is equals to liabilities and plus equity. So if the equity has grown and the liabilities have remained constant, then the assets will grow at the same rate or with the same amount as the equity. So we click equal sign is equals to our total assets for the previous period plus profit for the period. Hit enter. Then we can highlight, format it. So we use this one, top and double bottom border. Click on it. And we can see our prediction or our forecast for 2023 is complete. Now we move forward to 2024. For 2024, now we shall use the base year as 2023. So to get the revenue for 2024, we say, insert the equal sign, click on the revenue for 2023, then multiply by 1 plus 2%. Here you click on it. Now here I want to introduce another formula. We need to make sure that this reference is an absolute reference. What does that mean? It means that even if we copy it to the next cell, it's going to remain 2%. So how do we do that? So we come here and we click F4. Now when you click F4 or when you type in F4, you can see that the formula changes and you have the dollar signs before each of the letters. What this implies is that this is an absolute reference, such that when we copy it to the next cell, this particular figure will remain constant. Sorry. So once we type that, we close the brackets and then we hit enter. So we can see the revenue for 2024 was 4,681.8. Now, proceeding for 2024 cost of goods, we click one again. We write the equal sign, and then we click on the preceding cell multiplied by 1 plus the growth rate for cost of goods sold, and then we close the brackets and hit enter, right? And then here, since it's just addition, you can drag this cell here because we are using the same calculation. We add the same calculation we calculated gross profit for 2023 is the same one we use for 2024. So what do? You can come here at the bottom right corner and drag it to the right, and you get that. This is an easier method because it also copies the format, it underlines or it creates the top border. Now coming again to the other income, investment income, again we click equal sign, we highlight it, we highlight the previous year's other income multiplied by open brackets 1 plus the growth rate for other income, then you hit enter. Then we have the total income again. We can drag it the same way to make our work easier. Come to the bottom right corner until you see that plus sign. It looks like a plus sign. Click and then drag to the right and then let go. It copies and it also copies the format. Coming again to the administration expense, we type in equal sign, then we click the previous period multiplied by 1 plus the growth rate. Click enter. Distribution expenses the same. We click equals previous period multiplied by 1 plus the growth rate, which is 2% here. Click on it, close the brackets, hit enter. And then earnings before interest and depreciation, come here again, bottom right corner, drag it to the right, and it calculates for you. Then we also have the depreciation and amortization, again, equal sign, previous period plus, or rather, previous period multiplied by 1 plus the growth rate for depreciation and amortization, which is this. Remember, we are still in the worst case scenario. Close the brackets, hit enter. For the earnings before interest and tax, drag it again as we've been doing. For interest expense, hit equals previous period multiplied by, open brackets, 1 plus the growth rate for the interest expense is 10%. Close the brackets, hit enter. Again, earnings before tax, drag it and it calculates for you. And then we also have the income tax expense. To calculate the income tax expense, again, we use the same formula. It is the earnings before tax, or rather we can we can introduce the minus sign before that. So let me just do it again to avoid confusion. Equal sign, then minus the earnings before tax multiplied by our tax rate, which is here. Close the brackets, hit enter. Right, we can format it again. Come here and click this comma to signify that it is accounting style. When you hit the comma, it automatically rounds off the data into 2 decimal places and also introduces brackets as opposed to the minus sign. Profit after tax, again, is the same, so we drag it to the right and calculates for us. Dividends paid, we are told they will grow at 10%, so we click on highlight the previous period, multiply by, open brackets, 1 plus the growth rate there, and then close the brackets, enter. Retained profit for the year, same, we drag it and it calculates for us. Retained earnings brought forward. The retained earnings brought forward were the retained earnings carried forward from the previous period. So we click equal sign. We click for the previous period, So equal sign, click on the cell containing the previous period, that is B45, hit enter. Retained earnings carried forward, we can drag it again to calculate for us. Total equity will grow at the same amount as retained earnings. So we click the previous period's total equity plus the retained profit for the year. Click it like that, then hit enter. And then for the total assets, again, it will grow at the same level. So the previous period's total assets plus the retained earnings for the year, hit enter. And then we can format this as with the top and double bottom border for uniformity. And we have our forecast for 2023 and 2024. For 2025, we do it the same way.